Welcome back to another episode of Retire Right. I'm Ryan Wyatt, and today I am joined by Nick Lewandowski. As I mentioned in many of the episodes before, Nick is a wealth advisor here at the firm. He's also co-chair of the investment committee. Today what we're going to talk about is cryptocurrency. And this episode, when we were preparing for it, what we really tried to do is put ourselves in our clients' shoes to determine which questions they might have about cryptocurrency and whether it fits into an investment strategy or not. I want to place some emphasis on putting ourselves in our clients' shoes. So this episode is, if you're a crypto enthusiast, might not get a lot out of it. This is really geared towards our audience of people that are nearing retirement, recently retired, or even in retirement. And again, how crypto may or may not fit into their investment strategy. So we came up with a list of questions that we have either received in the past or think will educate our clients on the things that I previously mentioned. So without further ado, Nick, I want to start with some of the basics, and then we'll get into what our thoughts are on crypto. Can you just educate us on what cryptocurrency actually is? Mm-hmm.
In keeping with your intro, I'm going to approach this from the standpoint of I have 30 minutes and we're covering, someone who's never heard of this stuff before, right. All the topics we want to go. So that's the approach here. So imagine completely digital cash. Mm-hmm. There's no physical backing to it whatsoever.
Right.
It just exists out there in the cloud, so to speak, and on computers. And this digital cash can be transferred to anyone in the world that has access to the network that it's tracked on instantaneously. That's essentially what we're talking about when we talk about crypto in the simplest possible way. The amazing thing about it is it's not controlled. The supply and the recording of the transaction is not controlled by a centralized authority like a bank or a central bank type of thing tracking all these transactions. It's a distributed system that is a network rather mm-hmm. than like a single point of authority. What makes this all work is that the transactions, the data on the network is all cryptographically secured. Secret codes essentially is what's going on. And so cryptographic currency is shortened to cryptocurrency, right? That's literally where the name comes from. But the other amazing thing that cryptography allows it to do, it allows you to see every transaction that occurs on the network. It's totally transparent for anyone to view, but the transactions are all completely anonymized. So you have no idea who's sending what to what. In real terms. And then over time, we've gone way beyond that. So we've gone way beyond this digital cash kind of paradigm to where now in crypto, you have different cryptos that are essentially like quasi fixed income or quasi equity securities. And that's really beyond the scope of this episode. We're keeping it more focused on the digital cash type alternatives for a lot of these explanations.
And it's important for people to think because the US dollar, the physical currency or fiat currency, you might hear that term thrown around. A lot of people might think like, oh, well, everything's already digital today. But at the end of the day, if you needed to go down to an ATM machine and pull out physical cash, you could do that. Cryptocurrency is truly digitized, just 100%. There's no going and pulling out like a physical currency.
There's no correspondence to a real world asset.
It's not backed by anything. Correct. Right. And I know Nick mentioned in there that, no one person or banking authority controls, cryptocurrency. What we'll do is we will actually expand on that a little bit later in the episode. Another question I had for you, Nick, is what was in the first place, the intended purpose of creating cryptocurrency?
It's a good dovetail onto the central control thing, actually. The original Bitcoin white paper came out in 2008. Mm-hmm. Not a coincidence. Financial crisis was raging in the fall of that year. And this was published online by a pseudonymous, believed to be pseudonymous individual known as Satoshi Nakamoto. We have no idea who that was. Could have been more people. That figure kind of disappeared after publishing this white paper. And it essentially laid out the vision for what we just described in response to your first question. And so the intention behind it originally was very much, there was this distrust of, well, this banking system and this government-controlled finance that we had has gotten us to this thing where it seems like this whole system is about to come crashing down. Like, here's a blueprint for a new and better way for the future, is essentially how I would break that down. And a couple benefits that come with it is, in addition to kind of starting this brave new world without relying on those flawed authorities, you also had the ability to make transactions directly without like these intermediaries slowing things down. And you had this completely transparent record of all the transactions that we talked about in that first answer, which is totally different from the system we operate in today.
Let's just break that down a little bit more. And when we get into the possible benefits of investing in cryptocurrency, we can just gloss over one of the things that I know is on that list. So when you say like avoiding the central control, focusing on, the banking institutions that we all know today, what is the real benefit of doing that? At least from the cryptocurrency creators kind of like eyes.
Two benefits from a crypto enthusiast's point of view. Number one is just privacy in general. Sometimes that's because people would prefer to do things that governments don't like with their money. Some of those things are legal, some of those things are not as legal, or just don't like the idea that there are authorities that have access to all their transactions and all that anyway and can control them. So there's the privacy piece. And then the other piece is this idea that in the economy of today, governments control their money supplies, right? And historically, governments have a tendency to inflate the value of their currency away over time. And the idea originally, particularly with Bitcoin, is it has a fixed supply. No one can expand the supply. And so you're not subject to that, kind of like incentivized, like we're just going to like print more over time to make the system go round.
And I guess the other thing, like if you're thinking in practical terms, avoiding central control, everybody's on this network. You've already said that the transactions are direct, peer-to-peer, they're instantaneous. What would that mean? Like, just say somebody needs a loan. Could they ultimately go to the network and, use that network to raise the capital that they need 100%. For the loan?
And this is the expansion we've seen over time, is that the base like Bitcoin protocol is not great for that. The base Bitcoin thing that emerged, and it's been iterated on over time, was more like sending money and storing money instantaneously, totally anonymously. Now we're in a world where the same kind of systems and technology are being used in a way that is facilitating exactly the kind of thing you're talking about.
Schedule your complimentary review with Ryan and his team today. Just visit them online at wyzewealthadvisors.com or call 724-271-7019 to get started. That's 724-271-7019 to get started.
When crypto was first, invented or discussed, were any of the initial intentions or even current intentions geared towards replacing, physical currencies or fiat currencies, like the US dollar, for example?
I think if you pose that question to the crypto community at large, you would have a very large and heated debate over that
this
topic.
Is a point of contention.
I think there would be a point of contention. I think that there are some crypto enthusiasts who would love to see that, who would love to see the one world currency of Bitcoin, where that was kind of the whole ball game, that the whole world kind of adopted that as currency. But I think a greater portion, as crypto has expanded, of people as crypto has expanded amongst a greater proportion of people, I think there is also a widespread recognition that that's not totally realistic. And I think that those two groups fight sometimes about that topic as well. So I would say that overall, do not expect Bitcoin to replace your dollars in circulation for everyday transaction anytime soon.
Got it. Okay. Now let's transition into, we'll start getting into, our thoughts on whether it should be included in an investment strategy or not, again, for the types of people that we work with. So, 50 plus people that are nearing retirement, recently retired, or even in retirement. What are some of the risks of investing in cryptocurrency?
There are a lot of them. And the first thing you need to understand with cryptocurrency is you are not protected by any of the securities regulation that has existed ever at all in this space. There's some baby steps toward doing that. But my joke about the crypto world is that they are reinventing securities regulation in their world, one crisis at a time.
Right.
I think initially people were like, no regulation, never, it's always bad. And then slowly we're kind of finding out, this is why this exists, the regulated financial system.
So essentially what you're saying is that there's no SEC or Securities Exchange Commission oversight on cryptocurrency.
So there's a couple dimensions to that. One, it means you don't have a lot of consumer protection, like forget about things like FDIC insurance and all that. Also, just like the regulations you're subject to in general, whether it's how you're taxed on some of the transactions that you're doing, or whether it's whether your thing that you own is defined as this or that. A lot of uncertainty. The Biden administration, this isn't a political comment, it's just a fact, was very hostile to a lot of the crypto world. Definitely a regulatory crackdown, definitely very discouraging of expansion in this space. The Trump administration has taken the opposite tack. They want to deal with lighter touch, promote the space a little more, I'm not saying one approach is inherently better than the other, only that who knows what the next administration might bring. All this is evolving in real time and is subject to politics. So, in terms of that stuff that we really take for granted in the traditional financial system, it just doesn't exist yet, or it's being actively debated in crypto. And that's a really big deal to get out of it, all of it, because it's not just like buying a mutual fund, where you have all these protections that you take for granted. So
understood.
Before we move on to anything else, that's the one I wanted to start with.
Yeah. And, some of the other risks that I would say is that I would actually use the word extreme. The volatility can be extreme. Yeah. You can have rapid and unpredictable price swings. There can be potential for significant losses, also potential for significant gains, but the swings are substantial. The risk is high. Nick already covered the regulatory uncertainty. There's security risks as well, things that you need to be aware of. So there's scams that are out there that are essentially trying to, if you own cryptocurrencies in your online wallet, scams trying to take that. Everybody, I'm sure, has heard stories of, the people that have had Bitcoins on a physical key, or, think of it like a flash drive almost, if you will, and they maybe purchased that a long time ago. The value has gone up substantially and they lost the physical key. So there's really no way for them to get that back unless they have the physical key. Of course, market manipulation is a possibility. If there's no SEC oversight or oversight really, period, you're just opening that window of opportunity. And again, to us, that's a major risk and something that you should be concerned with. And then the last thing that I would want to say in terms of risks is sometimes there can be liquidity constraints, not in maybe like a traditional sense, but for example, and this is something that I've seen in person, there might be some obscure coins out there that somebody wants to purchase.
Not that Ryan ever dabbled in anything like this.
No, certainly know people that have. And it's actually very confusing in terms of how these transactions are even put through, but you have to go to an exchange and then you have to go to another exchange and you're converting US dollars into one, maybe more stable coin or what they deem as a stable coin. And that's what's then converted into these less stable, less well-known coins. And the process of getting that money back to US dollars is, again, confusing, difficult, and sometimes you might even need to put more money in to be able to convert the less stable coins to a more stable coin before you can even get it to US dollars. So it's a process. You really need to know what you're doing if you're purchasing these coins, again, especially the ones that are not as well known.
And in keeping with that, this is the market manipulation point. There are no rules about insider trading in crypto. There are no rules about scamming, essentially. So it's the Wild West, especially in a lot of these smaller things that are out there. You really have to know what you're doing, and you're probably, like with anything new, if you decide to dabble in those areas, you're gonna pay your tuition with real money to get your feet under you.
Yeah, I had a friend that worked in. He's no longer with the company, but he used to work in the crypto space. One, understanding the business and what they were trying to do, no matter how much he told me about it, was incredibly difficult. But two, I remember him vividly telling me that he came from finance. But I remember him telling me how surprised he was that there were no repercussions for the insider trading. It seemed like the Wild West of investing. What we're going to talk about next is some of the benefits of crypto investing. In our opinion, these are just the benefits from a logical standpoint on paper. We don't think that, and we'll get into this at the end, but we're not saying that these benefits are like necessarily our stance on, yes, go ahead and put a portion of your portfolio into cryptocurrency. They're just kind of the counterpoints to the risks, if you will. Nick, you want to cover some of these benefits?
Yeah, so the headline that attracts everyone, the only reason that anyone really cares, I mean, most people don't care about this philosophical stuff. They care because number went up really big, right? Like, so there's been early adopters of like Bitcoin and some of like Ethereum, some of these ones that are key have made an enormous amount of money, at least on paper, by owning these. And I think, so far it hasn't kind of retraced all the way to zero, obviously. Right. So I think whenever something returns like that, you get people's attention in a big way. And who knows, there's certainly the possibility that new things will emerge that will have a similar innovation and return trajectory. So I think the potential for high returns is there, and it's attractive to many people and draws them to the space.
Right. And, in my eyes, everybody, if you've been in the industry long enough, you've met somebody that looks at traditional investing, stocks, bonds, private investments, as gambling. I could not disagree with that more. Again, in the traditional sense, how we manage portfolios. Cryptocurrency, however, to me, is the closest thing out there to the investing version of gambling. It's highly speculative. Again, we talked about it. The swings can be severe. And of course, when you think about that, there's the downside risk, but there's also the potential for upside returns. How do you measure whether, the investment's going to go up, going to go down, or what the outlook in the future is? We'll talk about that in a minute, but that's kind of our stance on it. Nick, what are some of the other benefits that you want to mention?
We talked about the philosophical stuff about decentralization. I don't think we need to revisit that in detail, but that is a big deal for some people. We touched a little bit on it, but I want to emphasize that, especially the more transaction-oriented currencies that are out there, the speed and simplicity with which you can send money to any individual in the world instantaneously is amazing. Right. People used to tell me about this. They said, if you do it, you'll be amazed. And I was like, who cares? You're sending money. It's like a transfer, like a bank transfer. It's amazing to see it instantaneously go from origin to destination. So that's appealing to people.
And again, like you said, anyone in the world. So those are, international transfers. You're bypassing, the traditional banking
no more 3 to 5 business days.
Yeah, right. And so it's easy. A lot of times you're avoiding the fees associated with sending the money internationally if that's something you need to do, et cetera.
Then there's the innovation factor too, right? Some people love to be on the cutting edge, whether it's owning a Tesla or whatever the new hot EV thing is, or like the best PC or whatever. I think there are people who this appeals to, just participating in this new thing that continues to evolve and emerge as a draw in and of itself.
There's some technology under the hood, more specifically called blockchain, that a lot of people speculate might actually be able to be used in other capacities. And so that could be a benefit that, hey, now blockchain's here. What does it turn into in the future? And at the end of the day, nobody truly knows at this stage, or at least we don't know what it could turn into. But people seem to have a pretty positive outlook on that. All right, Nick, going back to the one point that I lightly glossed over, how do you determine the value of cryptocurrency? I know that if you think about like stocks, and obviously we have Wyze Direct, our stock strategy that we manage in-house, that's what you and Ron on the investment committee are doing, daily or at least weekly, is looking at stocks and how do you assign value to them to make decisions as to whether you purchase them. Is that something that can be done in the crypto space? No,
it cannot. So the frameworks that we rely on that you were talking about all rely on value and cash flows ultimately, right? You put money into a thing, you expect with some degree of certainty to get certain amounts of money back at some point in the future. There's a kind of a well-defined framework that you think about that within, and that gives you a basis for understanding, well, this thing's expensive, this thing's cheap, this thing's a good deal, this thing's a bad deal. Doesn't work in crypto. I mean, some cryptos will pay you more crypto, and that's like a quasi cash flow, right? But they don't. You don't put dollars in and get dollars back after spending some time in crypto land. So none of that works in that way. You have to use these more speculative means of trying to decide when to buy and sell. None of which we do in our traditional portfolios. But you have some people, just like in traditional markets, who kind of read the charts, and to me, that's always just like, oh, I see a head and shoulders or a double reverse two-humped camel, that kind of stuff. We don't even believe in that.
Right. It's just technical, like charting patterns. I mean, that's like active management to a T. I mean, that is like
even
the definition. It's just
active management. You see.
Right.
So, there are other kind of methods that I've read about in the crypto space where people will talk about these more holistic ways of looking at, like, well, this is the crypto, this is the network, this is what it's for, this is where demand could be. Maybe there's validity to that. To us, it's very, very speculative, and when you invest people's money for retirement, you have to kind of have a certain level of confidence that a framework is going to work and not zero people out. And we just don't have that level of confidence in that type of analysis. Last piece I'll mention real quick. Some people just approach it like collectibles. I think in crypto, you see a big overlap with like the gaming community, video gaming community, which maybe for a lot of our audience are not as familiar with that world. But in that world, there's a lot of comfort with like digital collectibles.
Right.
And I think that there is a huge portion of the crypto world that applies that type of thinking to it, and it's kind of its own subculture. We just don't believe that's investing. Ultimately, that's a whole other thing where you think what someone else is going to want for something in the future. And, again, in that subculture, it may be worthwhile, but we don't believe that works at a portfolio level.
The simplest way to kind of, summarize it is, something doesn't have cash flows, you can't value it. And if you can't value it, then if you think you can, well, what are you doing to value it? And you're starting to get into areas where you're looking at historical patterns, and we just don't believe in that, period.
And this is how we feel about gold as well. Right. If you go back and watch our gold podcast, anyone, we talk about this in the gold podcast as well.
So the final question here, Nick, can you just close us out with, I know the answer to this, obviously, does it fit into our investment approach? And the answer to that is not at this time. Can you maybe just expand on why that is?
So we are big believers. If you listen to this show, you'll hear this over and over again. You have to have a framework for decision making. And the framework can be adjusted over time, but it has to be there and it has to be pretty consistent. We just don't have that for crypto. We don't think there's a good one that fits with like a time-tested investment process right now, at least not one that we're comfortable with our clients' hard-earned retirement funds employing. Maybe 100 years from now, that'll change, as the space matures, but I won't be in the business at that point in time. So that's the main reason. If we had a reliable way that we were confident in, to value it, to integrate it in the whole menu of other assets, we would think about it a little bit differently. But in our view, the whole world's not there yet with crypto. So the other piece is it's hard from a regulatory standpoint to get really deep in the space, because you just don't quite know what you're going to be looking at if you get deep involved. And just overall, what it comes down to, we've come back to this over and over again, we just see it as more of a Wild West speculative space still. It's come a long way from where it was when I first had these conversations back in 2015, 16, 17, but it's still very, very speculative. And so that's the lens we look at it within is, it's the same type of thing as if someone comes to us and says, hey, I read about this stock in a newsletter, kind of thing.
And our answers, if something like that happens, our answer is going to be pretty consistent across the board. We're not going to dictate what somebody invests 100% of their money in. That's just not. We don't think that anybody should do that. But if it's something that you want to do and you want to speculate on, determine kind of like how much money you're willing to play with. Yeah. And whether it be a stock that you've been following and reading a lot about, and in the AI space, for example, and you want to invest in that, completely fine, so be it. Or if it's cryptocurrency, but it has to be in a money, in our eyes, at this point in time, that you view as kind of like a play account, and that you can afford to lose and go into it willing to lose that. Essentially, that's kind of our stance on everything there. So we hope that you found this informative, and specifically the parts where we started to share what our thoughts are on the space at this stage in time. So thank you for tuning in, and we look forward to covering future episode topics in the future. Thank you.
This episode's content is for informational purposes only. Opinions expressed herein are solely those of Wyze Wealth Advisors, unless otherwise specifically cited. Material presented is believed to be from reliable sources, and no representations are made by our firm as to other parties' informational accuracy or completeness. All information or ideas provided should be discussed in detail with an advisor, accountant, or legal counsel prior to implementation.